Hello, my name is Dr. George Mochocki, and welcome to International Finance 225, offered by Harper College, Palatine, Illinois. You're either taking me in an online class, a face-to-face class, and this is a supplement to our lectures, your reading material, your homework assignment. This is the overview. So what I'm going on here is just, you've already done this. There's no way you'll be able to, well, you could, but to fully understand the material that's being presented here unless you have a good solid foundation and you've read the book. Print out my concept map and course management system Blackboard or mind maps, and you have it in a PDF file, two pages, and then you add on as you're reading the material. You add on. You go to the lecture or into the discussion board if it's on an online class, and you will at that time add on more. Remember, you only had the first, second tier, and then later on, after now you're all finished, we've done everything else, and now you're reviewing at the end of the week, ready for your quiz or a midterm exam. And what you'll do is look at this video and it'll kind of summarize. And also the mind maps. When you look at the video, you can stop me, turn the volume off, and or yeah, I would leave the volume or the voice, unless you're doing it a couple of times over, and you would at that time add on or see what you've missed while reading the book and the lecture that I'm covering now. I'm a little bit more in depth. I go faster in here. I try to keep it underneath an hour. Those of you have it. We're at chapter 19. After this chapter, you only have two more chapters, and you're finished with the class and ready for the final exam and ready to turn in your, for like a better, your MMC feasibility research study in which country your team is planning to open up, utilizing what you've learned from the previous chapters and on. Now, if you look at this chapter, I've been adjusting my mind maps a little bit depending on the amount of information. This chapter is a refresher from corporate finance. If you didn't have it, has a lot of terminology we had, but it is a lot of terminology, a lot of concepts, a lot of things. So what I've broken up, remember, on the color coding. So 5 payment methods in light blue. Just a quick reminder. So when you're looking at the map and you're going, you might print it out in color, black and white. I don't know how PDF is going to print out on your own personal computer, and I think I saved it in color. I'm not sure. But you'll find out what is black and white, then you'll know. If it's black and white, it's irrelevant. You'll see payment one, payment, and you'll see what I've added on in here. When I go on here, I have payment methods. Do you see where this one is? So each one of these headers or subtopic that would be all in here, you would have payment methods and all the way down, and then on the final one, letters of credit. And there are prepayments. There's letters of credit, payments, consignment, open account, impact a credit crisis on payment methods. I'll get back to that. That did have an effect in the international market, trade finance methods. And so, these are different subtopics. Because what happens when you print it out, even though theoretically the mind map should expand out, and I could do that. But the problem is when you're not used to it, and I printed out, I would have to print out 4 pages, and it may be a little bit complicated. So this makes it just a little bit easier for the student's perspective. Mine, I just keep on adding on because it's irrelevant. Because I could have one section, and I could do that. I may do that sometimes next time. That's just the logistics. Let's get back to chapter 19 that we'll be studying today, financing international trade. Now, you've got we have the this one here, this impact of credit crisis on a payment. And I'll talk a little bit about what's going on with the Chinese yuan, and what they're doing. You remember we talked previously, because that's what I would do in a face-to-face class. I go, what's happening in the international market? I don't know. Look it up. What's going on? And right now you're looking like the stocks has fallen. The Dow Jones, everything else, and Standard & Poor's reported the lowest drop in a day. It's shaking everything else because what's going on in the China. Remember, we're in a global market, and then it's a global market. We most likely, one country has a ripple effect with other countries in the same market. All right, let's go on into here. So I have this information here, and we should do pretty good. Okay, so let's go on the first one. 5 payment methods for international trade. Here you can do a lot of definition. And remember, when you're doing my mind maps, make sure I've put in more words 'cause it's a little easier for you to comprehend. But the more senses you utilize, the better or the higher probability of retention. Because if you're going to go into finance, or even if you're a manager and you're working for an MMC, or you have an exporting, importing department within your organization's medium or even small export and import, you should understand how the terminology and what's going on in the market. You could pay people that give you larger companies, have people that statistician, economics department that's looking internationally. I'm only a small business. How can I do it? Look at the Wall Street Journal. And when I look at, I'm not trying to sell the Wall Street Journal, and we'll talk about the Wall Street Journal is what I look at. It gives me a good flavor of what's going on there. And if there's something that's really interesting or something that could have an effect, doing a SWOT analysis, the strengths, weakness, and opportunity affecting my financial financing trade, my future contracts, what's a spot rate and exchange rate, or how do I remit my currency going back and forth. I have to be able to make adjustments. This is a trigger, a flag. Something's going on. Take a look at it. Does it affect you? Is it affecting the geographic area that I am in? Even though it's global, right now it's the Asian markets are having a lot of problem, and those that we talked about that are the currency is tied to the denomination of the U.S. dollar. Since the U.S. dollar is strong, what's happening is that's why they devaluate, because they're tied to it. So if the U.S. dollar is strong, their exports from the country that's exporting, people who want to buy my product have to pay a higher price for that good. So it's good overall, those that are exporting. If your currency is not tied to the U.S. dollar, since it's stronger, your currency is weaker to the dollar. What will happen is that I'll buy it because you're the lowest cost. I could buy, I'll buy your products. Right now, it's good for the economy. Everything's got a strong dollar. Everything else, it's good if people are investing or buying our securities, but it's not good for the American worker. It's not good for the businesses because people aren't buying my products. Too expensive when I'm going out because it takes more of their currencies when they convert it into the U.S. dollars. So my prices are higher. Just for when you look at a lot of countries will devaluate, and then if you look at China, and we'll talk a little bit about that. Let's go for it. Okay, 5 payment methods. Real quick, a quick overview. 5 basic payment methods. Now I'm going to make this just a little bit bigger. I did this so I showed everything else in. Worked out good. So let me just put this up at, I think last time I did it at 200. 200 looks pretty good. I'm live. Remember those who've taken me before? You're in chapter 19 on here. You already know it over and over. Dr. George always says that. Dr. George wants you to understand. I want you to learn the material. Not only pass the class. I know there's a lot of concepts, but I want you to learn it. And the best way to learn it, the more senses you hear me, you see me, you writing yourself up, you hear something else, you're looking at a video. All those are stimuli that you've learned in psychology that will anchor those concepts into your mind. So if I'm looking at it, I may forget what the heck is that name, but I remember something about the music. I remember a picture in my mind. All that funnels into tries to find it. Your mind's one big computer or database, for lack of better words. Okay, so 5 basic methods of payment are used to settle international transaction, each with a different degree of risk to the exporter and the importer. Two-way street. Now, on this one here is just an overview about the 5 that we're going in here. So if I'm looking at, I'm going to talk about it. I might just go faster. Prepayment before shipment. So it tells you a little bit. Let me just move this over a little bit so you can see it. Remember, we've already discussed this in class. I don't want to go too much. It has all the stuff. I've got the concept maps. It gives me the highlights. Stop me right now. Look at it, refresh it, or look in the book. But let's go forward. Okay, so there it is. There's a comparison of payment methods. Nice chart. Which one works better? Why do I use it? Remember, in corporate finance, hopefully some of you had corporate finance account. We talked about the letter draft, site draft, documents accounts of payment. Time draft is just a checking account, for lack of a better word, for a business. Consignment and open account. Okay, so I'll close this off here. Just a quick overview. excuse me, on the five payment methods for international trade. And this is just abbreviation, so I could condense everything else in there. I really, when you look at my own mind maps, I condense the heck out of them, but you know the material. Remember, you've read it, you've done everything else. These are just triggers. Like, where's this file at? I look up here, financing, international trade. That's George Mochocki, blah, 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 blah. And that's, and all this is there. So it's just little triggers for the mind to retrieve it when I need it, or when I see data and I'm looking at different data. Oh man, I remember that. And then you look a little harder, and it's in here. You just got to find where you place that file, that information. Okay, so let's look at the five. Remember, now I got them in blue, so I got 1, 2, 3, 5. The first one we talk about prepayment and prepayment methods, and see, and now all he's going to do now going forward in the last one, because there's more definition, less um, problem solving or equations. At this stage, it's now more concepts and terminology. So if I'm looking payment for payment methods for international trade, boom. And the next one, if you look at letters of credit, when I open up this one right here, open up this one, I'll have this. So you know in which category I'm discussing. I'm just trying to make it easier. Once you understand it, it's not that bad. Okay? And remember, part of going to college, whether you're taking me online or here, or taking the at Harper College, or you're taking another community college, I always put the plug in there. Since it's a finance class, it's the best investment you could ever do. You're paying taxes already, so offset some of the costs. We're located locally. Most of I know Harper is I teach at Harper in College Lake County in Illinois. One's in Cook and one's in Lake. But what happens is Harper is striving to be the #1 community college in the United States. And how do you do that? You'll see more and more of their staffs are PhD or doctoral, where they have terminal degrees. With terminal degrees, there's no higher to get. They are at the max, and so you're getting your best money. The instructors and the teachers who teach at community colleges that have their PhDs, we want to actually exchange or provide information to the student, not necessarily always doing the research. I could do the research, and I do a lot of research, but not to do the research to keep tenure, but to do the research to help the students. As a business, doctors in business administration, theoretical ideas are good. Doesn't do them any good unless I could implement it today with my clients, within the customers. Change it now. The other theory, the research, okay, maybe 5, 10 years. Okay, that's nice. What am I doing now? I'm suffering now, or I need some market correction. I'm trying to start using the finance terminology, so when you're talking to other people, oh, that makes sense. What do you mean it's market correction? What's he talking about? Well, he must know something about finance. I know what he's talking about, but that's who I want. All right, so let's look at that. Same as cash in advance. Prepayment. Remember, this, payments usually by wire transfer. Methods offers export a greatest degree of protection. Requested when first time buyer, you knew. I don't know if your checks are bad, your credit's any good. Danger of pre-shipment cancellation. Importer, a country has high political risk. I want prepayment. Or I love you and everything else. I may give you some of the kind of discount shipping, but you got to pay me cash before I submit anything to you. The next one is letter of credit. Again, this is something you've learned in accounting, and it's something that we've already discussed in corporate financing. These are all basic fundamentals. Remember, the community college, what I'm teaching here is give you a baseline. I mean, not, and I'm giving you a baseline from the perspective of the author. Once in a while, I'll throw my own two cents in, because I don't want to confuse you. I want you to understand. Down the road, when you're going for your bachelor's and for your master's, or if you have some more experience, now you could have a discussion, as we do in our lectures, or if we've been having in our discussion board online. Okay, so letters of credit, and this is abbreviation. Letters of credit. Okay, payment methods. Remember, I'm always tying in to this here. I'm just kind of bringing it up because I keep on changing, and it's okay. Remember, you have to change and learn depending if you put the stuff out there and it's too confusing, it's too hard to read, you're not gonna read it. I know I wouldn't. You know what I mean? So I'm trying to adjust it like that. That keeps the mind going. It keeps you going, man, how is he doing the data? Some data has to be presented this way, just like you do in the financial market. I've got different ways of getting the cash inflow, but how do I handle it? I got different ways of paying, and which one is the best way. Remember? And it's always a mixture if you're looking at finance. There's no one good way, depending on your product, depending on the country, depending on all the other factors that we talked about. Okay, so prepayment, same as cash. First time buyer. Okay, we good. Letters of credit, payment methods for international credit. So this comes in here. I don't know if I could do that. You understand what I'm doing? I didn't put it in bold. It's lighter. And it's going to go through it. Once you understand the theme, it keeps your mind. Now you have to focus and listen a little bit closer. Okay, the instrument issued by a bank. This is a letter of credit on the behalf of the importer, the buyer, in parentheses, promising to pay the exporter, the beneficiary. Look, I'm using the terminology here. Buyer, exporter, buyer, seller. All right, one's a buyer, one's a seller, but we're in finance. We have the same terminology. When you're being tested, you're gonna be tested on the terminology from the book. But if you understand it, basically, you could figure it out. Critical thinking skills you're learning in this course, or you're learning all the courses that Harper or other colleges, the instructors are trying to get you to start thinking outside the box, thinking within the parameters, looking at what's going on to understand it conceptually. Then I could put the equation, and now I understand when I solve it, what does this mean? Okay. Okay, so promise to pay the exporter beneficiary upon presentation of the shipping documents, okay, in compliance with the terms stipulated therein. Remember, English second language, and for those who I've mentioned before, I'm dyslexic, so some of the words I turn around. Once in a while, I get stuck in a word. I got to kind of like pause and reprogram it. But when I look at this, why did I bring this up in here class? Because 60% of your workers, your individuals, have some kind of disability. I don't look at it as a disability. I look at it as a blessing, because I have to dyslexic, so I have to align everything. I have to look at it, all the parts that to fit in. It works in my benefit because I could break something down and I could find where issues are because I have to have the linkage going into it. So I have to study a little bit differently. I still take the information, I just have to adjust it in here. Plus, like I said, English second language. So some of the words I may pronounce a little bit differently. No problem. You have it here. You have it in a book. You understand. None of us are perfect, and I bring that out there. But what is that? Even though you have some limitations, that no one sees, you still have to be, and you're still successful. Worked all the way up. I've got the PhD, and starting off there. So hang in there. Those of you who have it, those of you who don't have it, help others. But remember, you have to learn it your own way. We are all unique. We all have individual fingerprints. We're all different, and we take information. We understand it one way, but some of us have to do some tweaking depending on our own skill sets, our own limitations, or how we take in information. Okay, so completion stipulated therein. Okay, in effect, the bank is substituting its credit for that buyer. That's all it's doing. Letters of credit. The bank is just stepping in here. Remember, the bank promised to pay the exporting. It's just a good letter. It's better than just my checking that we're going to talk about later. Okay, what are drafts? Payment of or a bill of exchange. This is another terminology for a draft. An unconditional promise. I'll open this to draw a promise drawn by one party. Remember, finance is always terms and condition. Interest rates and all that, spot rates are very flexible in a volatile market that we're experiencing now, which is an interesting market, especially for finance international. In the classroom, I could talk about this. So even if you're watching my video once I recorded a few years back, look, they've talked about here in 2009 when we had the meltdown. So let's look at this one. You're already current, and let's see what I've learned and apply it and see what we should be doing. Usually the exporter instructing the buyer to pay the face amount of the draft. The draft is like a letter upon presentation, or a check for lack of better words. Draft represents the exporter's formal demand for payment for the buyer. Remember, you should already have these. These are basic. The definition, you can get rid of the usually, just go, you'll highlight the exporter, instructing buyer, face amount. You can understand that. I understand that you may have some problem. Another person look at your notes, say, what the heck is he talking about? As long as it works for you and you get that A on the test, you're looking at a different way. Or you're using this and you're discussing it to your peers, or you're doing some kind of presentation. Utilize the mind maps. They're just bullets. You still have to read it, understand the information. This is afterwards, just how you pull it back out of your memory banks. That's now in your long-term storage. Okay, so draft represent exporter's formal request. The next one, draft affords the exporter a protection, less protection than the line of credit. Okay, here's a line of credit because the bank is stepping in here, and this one is me just writing off my own. Okay, because the banks are not obligated to honor payment on the buyer's behalf. Okay, consignment. Phew, pretty good, huh? Look at international class. Just on a side note, when I was taking international class, I talk Polish. I talk Polish. I teach. I speak Polish, and I thought I was really neat. The class I went into, international studies, there are people there that speak 5 languages fluently. Most Americans, including myself, I'm a little better. I speak 2 languages, but most Americans barely speak 1 language effectively. And when I'm looking at speaking language, because we have the slang and everything else, different cultures, so that's why it's a lot of our words have dual meaning, and sometimes it's a little harder for other people coming in to understand that. So there's nothing wrong with that. And if you those who speak a different language, sometimes you twist the tongue. If I don't speak Polish for a while, those words don't come out right. Hopefully, my words are coming out. You understand me. I don't know if you could slow me down, but so I have it written on here. Okay, national trade. Let me just put that into the dictionary. Okay, exporter consignment. Exporter ships the goods to the importer, and later on we'll talk about bill of sales and everything else you had in for like in accounting and finance, and a little bit in corporate businesses, while still retaining actual title to the merchandise. Okay, remember consignment? I ship the goods to the importer while retaining the actual title. They got the goods, but I still got the title till I get the money. The importer has access to the inventory, but does not have to pay for the goods until they have been sold to a third party. You gotta be careful. That's a relationship you want. What if I'm not good in the marketing and I got all this good, so I have my inventory someplace else. I don't control it. They don't pay me till they sell it. You have to have that relationship with them. You always have to, terms and conditions. When you take business law 1 and business law 2, they talk about a little bit international business laws and regulation and IMF, International Monetary Fund. How we play fairly within the market. Okay, so there's just some information. Generally throwing this in there. I'm watching my clock up there. I better keep on moving. Okay, the exporter is trusting the importer, like I mentioned before, to remit payment for the goods sold at that time. If the importer fails to pay, the exporter has limited resources because no draft is involved, so I have nothing no letter, no check or anything else, and the goods have already been sold. For lack of better words, they already have it. I just waiting for them to pay send me the money back, remit it. So it's a good, you burn me once, I'm able to utilize it. And the thing that if you've taken me for business to business marketing, or business to international marketing, or MMCs that are marketing other subsidiaries, different parent countries, once you mess up with one, it's not like consumers. There's a billion or trillion out there, a few billion out there in the world. What happens? The other MMCs know, and you're out of business unless you change your name and recoup, because they'll say, hey, we got to tighten up our contractual agreement with George's with Game Consulting, for lack of better words. Okay, so now we have an open account. What's an open account? Open or what we would call a line of credit. Opposite of prepayment, the exporter ships the merchandise and expects the buyer to remit payment according to the agreed upon terms. The exporter is relying fully upon the financial credit worthiness, integrity, and reputation of the buyer. Better luck. They're looking at your FICO score for it's just an indicator. What does the score tell me? Have you paid on it? If you were going to find out when you look at businesses, business usually pay right away, even though they have a dispute, because they don't want to have their FICO score or their credit score, for lack of better words, is all tied into the FICO, go down, because that means when they take the line of credit, everything else, especially in the economy as it's now, is growing up, but it's kind of like hitting a stumble block of what's going on in China and the other Asian markets that's affecting the U.S. Also, investors are afraid to invest, and slowing down the economic engine, the global economic engine. So you have to be Like it or not, that's the only thing you could look at. So they'll pay out first, not to do that because they don't want to have any kind of bad blemishes. Settle it later, and recoup with some kind of interest. If I'm a good buyer, going that way. A little bit, just to think about what you're doing. Look at the credit score, why businesses will pay because they don't want, because I got a poor credit score, cost of doing business, or the margins and everything else that I'm buying internationally. They look at that the same way. It's going to cost me more. I don't get those great deals that I'm looking for. Okay, method used when the seller and buyer have a mutual trust, and this, I got a relationship and a great deal of experience with each other. You have to understand the other person. Remember, it's a smaller market, smaller. I'm not talking about consumer. Still talking to consumer. I'm just talking business to business at this juncture. Okay. Now, the impact of the crisis payment on payment methods. Let me just hit this real quick. Okay, so I'm looking at the when the crisis intensified in the fall of 2009. I thought it was 2008. My mistake. You and I make errors. Hopefully not too much. I'm not much of a historian. I always teach people, you take a history class. How do you fail? It already happened. What the heck? How can you fail? You already know the answer. It's just all the dates and everything else. And remember, the timeline or trends that happen is just an indicator of what may happen in the future. There's too many different factors involved. When international trade transactions stalled, many financial institutions experienced financial problems. The consequence of exporters lost trust in commercial banks. We talked about that in the previous chapter with Libor accounts, the London bank that looks at the average of the interest rates of different banks given to the most creditworthy bank, and that was being adjusted, manipulated. So I was paying more for the currency, figuring I was getting the best deal, and that was just a manipulation. Okay, the crisis illustrates how international trade is so reliant on soundness and integrity of commercial banks. Okay, so it's relying on sound. Now let's tie in. I'm already at 26 minutes. I just checked to see how much time I have in my hour, and I'm not even a quarter of the way. If I'm looking what's going on, this is what happened in the 208. So people said we went through it. If I'm looking at Wall Street Journal, in the Wall Street Journal, market realism for global sell-off, risk of rise in U.S. as the world staggered. What happens because of China's economy that's fueling everything else? That's the coal, the precious metals that they need to produce the goods. That's slowed down. It has a ripple effect globally. They devaluated their yuan. I was going to say yen. Yuan, it's with a U, their currency, for lack of better words. By the devaluation, they want more people to buy the Chinese goods. But as I mentioned before, other chapters, if my currency at the subsidiary is is tied to the denomination, to the dollar, and the dollar is strong, it's good for me. I could buy more stuff. I don't want to buy it, but it hurts my exporting. That means people in the U.S., their jobs, because the dollar's strong, yeah, sure, I can buy stuff, but people aren't buying our products. So that means I got unemployment, all this stuff going on here. So what is it basically? Emergency countries take a hit, and then I'm just reading real quickly. Remember, this is what I would do in a face-to-face class, or I'd post this on online. But since this is over with, a tumble. Let's see who took a hit on here. Russia, Indonesia, South Africa, Brazil, and other communities tumbled to a multi-year lowest against the U.S. dollar. Stocks increases collapse. It used to be for the ruble. It's the Russian currency. At that time, the ruble was 70 rubles to $1. Not too bad. The dollar's still stronger. Now it's 36 rubles to a dollar. Okay. So it's a little bit better. So it's hurting. So weak currencies in these economies present a gloom dilemma, right? Rise rates to defend them, and the economy takes a hit for tighter credit, and let them fall. The inflation erodes household budgets, right? So I let it go up. So now inflated. Now my own economy is hurting. And meanwhile, dollar-denominated debt becomes a bigger burden for many cash-strapped governments and companies. Okay, so that's one. It's a good article. You can look at it, Wall Street Journal. And this one was from, I forgot what, at the day. Okay, the other thing you're looking at, what's affecting it? I'm looking on here, economic forces without lag time. And the other thing, if you're looking at, what I want to do is computers coming in. Remember we talked about trading and everything else. Nowadays, it used to be when I look at the Federal Central Bank, they do quarterly estimates for what the economy is doing. There's another thing that I was looking at. There's a new service coming in that's looking at social network, looking at buying and not trusting the government. And what I want to see the name on here. I'm trying to, I had it left it up in here. Turmoil raise, what the heck do I have in here? It was in here. There's another services that will give you an analysis. And I had it out here. I just can't think of a new one popping up. They want to do. Will it give me the input I wanted? I'll let it go. Okay, but anyway, there's another services that, other than the central bank, the Federal Reserve, giving it a quarterly, some institutions or banks, their own, will do it on a monthly basis, seeing what the trends are going. Now, because of computer, because of computers, they could do it. Your dashboard is what's the markets going that you're looking at. That if you're looking on the news, here's a dashboard. You see the line going down, goes up. The stock market or the index, Standards & Poor, or the Dow Jones, which is the 500 of the most stable companies, going down. If they're having troubles, all the little mom and pops also could have some ramifications. Because if I can't trust the big ones, who's going to trust the little guys or the little guys and gals businesses or stocks, for a little better words. Okay, so look at that. But what the articles are interesting now, because of computerized, they know, they're tracking every minute what's happening in the economy. So now businesses are tracking it monthly. Yeah, the central bank does quarterly output, so everyone's looking to see what the Fed's going to say. Not only central bank, the U.S. is what's the Bank of Tokyo, what's the London Bank Lombard doing. So what are other banks are doing out there, other exchanges doing out there happening. The issue is when you're looking at this other site that's saying, hey, we look at social media, we look at sales, we could tell you what the economy's doing by the employment and everything else, other than what's happening with the government. Remember when I told you with the government, especially with the Chinese government, they call it a black box. They're doing something, but it's not transparent. What are they doing? We don't know. We're taking a second guess, and that's why a lot of people are pulling out. We don't know what they're doing. They're trying to stabilize their economy, because if they stabilize their economy, they're saying the Chinese economy is growing by 7%. Most economists out there are saying maybe by 3%, because I can't really get their numbers. It's not as transparent as it should be. They're doing the right direction, trying to help their own economy by devaluing, but other countries are devaluating their currency. Also, it's good in the long run if I am buying their products and my dollar strong, but it's or I'm exporting, and importing is not doing me any good. China doesn't import; they do, but mostly they're doing a lot of exporting with their goods. Okay, so reliant is soundness and integrity of commercial bank. All set. Look it up. Look at it and just go, hey, what's the new analysis of economic forecasting? And I want to say it's not Comcast, something out there. I apologize. I'm live, so I'm not going to stop. Okay, trade finance methods. I better get moving. 7 types of trade finance methods. Okay, there's 7 types. Now we're starting a new thing. Remember, I went from the blue. I'm kind of in the hazel or pink, depending on your color interpretation. Okay, so accounts receivable financing. These are the 7 listed. Factoring, we talked about factoring and accounts receivable. I sell them off. Letters of credit, bankers acceptance, working capitals, medium term capital goods financing or forfaiting, and that's basically a factoring. It's just a keyword. The author does a good job explaining that. And I'm using the same terminology and everything else. He utilized it not to mess up, even though it says Countertrade 2 words. I'll put it in here. We're all right. Okay, so let's go with accounts receivable financing. How do I do a financing accounts receivable? I'll move this up a little bit. Trade finance. Remember, I always have this, so as I'm going through the different 7, in which topic, and this is a subtopic of. It's easier this way. And then the flags are just to give you some attention to focus in. Okay, this is just the first keywords. Could take. Just open account shipment. Don't even eliminate all that. But I'm trying to help you out here to look at it. Remember, each one's individual. Utilize what works for you. As long as you get the B's and A's in my class, you're very happy. Okay, or a time draft. Take a form of an open account shipment or a time draft. The bank will provide a loan to the exporter, secured by assignment of the account receivable. It's just account receivable. All right, so I'm just giving them a time draft, basically like writing a check against my accounts receivable. Okay, so let's go. Let's see. We have this one. I'm going to slip over here. Oh, we're not doing too bad. Got to keep on moving. Now, if I'm looking at factoring, factoring has two things: trade finance methods. The exporter sells accounts with receivable without recourse. Look, when you're looking at accounts, when you're buying my accounts receivable, I get at this, and they say no recourse. I'm not taking a discount, and they may. Usually we factor in some kind of discounts because I need the cash because I have cash flow problem. But in this case, I want to finance some kind of capital investments. I don't want to take out a loan. I've got other things, so I'm basically factoring my accounts receivable. Those are individuals who owe me money, haven't paid me, their creditworthiness, and now because of the economic turnout, if the economy goes down, most businesses will look at their accounts receivable. 70% are going to pay me on time. 30%, 20% may be like 1 or 2 months late, and 10% may default. Or it could, it depends on your industry, depends on your subject. Remember, when you look at different ratios in finance that you've learned in the class, you have to compare apples to apples. Am I comparing one industry over the other? Am I comparing the region to another? I'm international, this region to domestic, to another region is what I have to look at. Okay, so that's factoring. Okay, letters of credit. Remember, we talked about the R a little bit. And now this one's a quick overview. Known as commercial letters of credit or import-export letters. Remember, in finance, know the terminology if you have a question. What's another name for letters of credit? Okay, to be a multiple choice, true and false. Revocable letter of credit can be canceled or revoked at any time. Use my letter of credit, line of credit, for lack of better words, or my credit card. I can just pull it up. And let's look real quickly on credit card. If you look at credit card, if you default on one and try to keep everything else on Mastercard and drop Chase or Bank of America card and just default, hell with them. I got these other ones. What's going to happen is the other ones are looking. You defaulted on two, but you're going to be paying this one. They're going to raise your rates up because they say, hey, you've done this. It's only a matter of time when you look at your credit score that you may default on me. So I'm going to adjust your payments. Could they do that? Read all those terms and conditions on your credit cards or anything else, or your line of credit. Now, some line of credit businesses have. That means, remember, as a business, I don't want to always go looking for it. So I got a line of credit. I need that for my inventory. I need that for doing stuff down. So a line of credit is good. So so letters of credit can be revoked anytime or revoked anytime without prior notification. Just turn you off. It's not good anymore. Next time you use it, it's been canceled, but it is no longer used. They don't use it. Similar in bank, because the thing that really hurt them is without prior notification. In business, it'll mess up my inflows. I need to understand if I have an instrument that just right one day is not working. What the heck? I'm trying to put out a fire. I don't want to put out fires. I want to make sure I remember finance that I have a steady flow of income. I'm not out there to make the money. I don't want to take the big losses. I like those nice profit because something happened in the market. It works out well. I took a loan out, and that ties into international marketing. A while back when they had a big housing crunch, not just when I was still younger, all right, where a mortgage was at 22%. Well, my God, it's like as a charge card. You just right. So what happens is I was trying to find the best mortgage. There's a company, there's a Polish Roman Catholic Union, and what they had to have their nonprofit organizations. They can't make a profit. They put the money back in there. So I invested a lot of bonds, a lot of security. All of a sudden, because of the market, they made money. I mean, remember, it's okay. It's not that they weren't out there to make money. They're nonprofit. They want to make the money like anything else to sustain the cash flow coming in for their members. But they made more money, so they're giving out loans. All I had to do is come in there. I'm Polish Roman Catholic. At that time, they didn't really care. You came in there and you got a loan with very little, issues on there. Okay, so now there's no longer used just for that reason. I need to keep this I need to understand what's happening. I can't have these surprises because that doesn't bring my cash flow in. It's like I just got fired or an inflow just stopped. I was looking for it and I got to run around. Okay, so irrevocable letter of credit was on there. Cannot be canceled or amended without the beneficiary's consent. So now it's both of us. If we're going to cancel, here's the reason. We're going to raise it. We'll at least give you notification. Depends on your terms and condition. And here's some examples of two of them. I'll just show you out here. We talked about this in class. You'll name an exporter. Da, da, da. Stop me. Look at what it looks like. We've discussed it already. And here's how the flow. And this one's kind of nice. The author did a nice job. Follow the numbers 1, 2. The request. We discussed this. I'm not going to go on this. So you have that information. Let's close that on. But I open it up so in case you're on a smartphone and you're studying before the exam and you're looking at this, you could, oh, geez, yeah. Let me stop. Let me look at that. And remember, we talked about it, so now it makes sense for you. If not, look at it or take for the class. This is just a summarization. Okay, what's the draft? If I look at draft, also known as a bill of exchange. Let me move this over a little bit here. A bill of exchange of an unconditional promise drawn by one party, usually the exporter, requesting the importer to pay the face amount of the draft on a check at the site of a specific future date. Okay, bill of landings, we've had that there. Here's a bill of landings, serves as a receipt, a shipment. And later on, bill of landings, when you take for corporate finance, and it doesn't make a difference, the same thing with international finance. Who's paying the shipping costs? We're not paying the shipping costs. There's a lot more in there in the bill of landings. I'm just giving a general information on here just to tie it into the international aspect. We'll discuss it more. We discuss it more within the classroom. In a summary of freight charges, it conveys title to the merchandise. When do I take title? When do I take possession? Includes the following below. Identification marks, description. So if I had a bill of landing, what list 5 of identification includes what 5 items in the bill of landing: description, name, exporter, importer. Yeah, just taking a check. Evidence of loading and receiving ports. Okay, commercial invoice currency overview. Exporter, seller. Just so you understand, get the exporter is the seller, right? Importer is the buyer. Okay, description of merchandise being sold to the buyer is the commercial invoice. A lot of times they'll give me a PO or a purchase order in that case. Okay, so you got the name of the address, seller, the date, everything I said. You have to. What's the main information I need on any kind of a contractual document? I need the time, the pricing. What's the freight? What's the handling? Is there insurance? Who's paying it? Is the supplier paying it? Am I paying? All those. What's the quantity? What's the weight of the packaging? What's the shipping information? Okay, variation of a letter of credit, LC. Remember, those are just acronyms. Get used to them. You'll have it here, I think, when I have letter of credits here. Remember, if you think, oh, I didn't know, how did I get that? Someplace in any kind of paper, I would have an LC. There it is, LC, letters of credit. Very good. You see, if I had it in the classroom, you would have one big one. I'm just trying to do this so it's very focused for students to focus in on here. So we got factoring, coming up in here. Where was I? I moved around here. The last one. Okay, here we go. Letters of credit. Variations of different types of letter of credit. Is standby letter of credit. Remember, when you're looking at a letter of credit or any of these instruments, majority instruments, the terms and conditions is what do I agree with. Here's a general and everyone is acceptable. Because I got poor credit or because I got good credit or I got real good credit and you really want me, I could make some adjustments on those terms and conditions as long as it's written and both parties agree. And so here's some variations of letter of credit. Standby letter of credit used to guarantee invoice payments to the supplier, promise to pay the beneficiary, the one who's reminded from beneficiary. I don't know what I did in here. Yeah, I'm correcting it. Come on, why? If the buyer, thank goodness for technology live. Remember, I'm not reading off the screen. I am, but I'm not I'm adding into it. If the buyer fails to pay as agreed, okay? So the standby letter of credit promises to the beneficiary. It's a guarantee invoice payments to supplier. Okay, now transferable. Remember, it's a little different. We talk about letter of credit. Is the bank that's? It's like having a letter of credit, for a little better words. It's like having from a consumer point, I want a bank a check, a certified check from the bank versus my own personal check. It's still coming from the bank, but this one's certified. It's good for that amount, no matter what happens if you are the individual that this check has been issued to. So it has a little more protection to the person collecting it. Okay, now transferable letters of credit. The other one is allows the first beneficiary to transfer all or part of the original letters of credit to a third party. We discussed that. I just remember. And if you forgot, look into the book. The book is your resource. Book is your resource. Your notes are your resource. This is a summarization. Assignment of procedures. Original beneficiary of the letter of credit pledges or assigns the proceeds, that's the money, the remittance, under the letter of credit to the end supplier. Okay, we've got the 3 letters of credit. We're doing pretty good. Now the banker's acceptance. Now I'm looking at banker's acceptance. Here's the draft, for lack of better words, the draft, banker's acceptance, what it looks like. Again, here's the flow chart. Look at the flow chart. I'll bring it in there. And let me bring it in so those of you are looking at, you could see it easier. Very sensitive. I'll bring it in a little smaller. And now what you could basically do when you're looking at this, you could look at this and was able to, for lack of better words, I apologize for the ringing of the phone. I just paused it for a second, so I'm back on here. I'm working, out of my home office, so recording this here. So I got a new phone number, and I'm picking up whatever somebody else has had. I'll try to. We're still doing good. Okay, let's go forward here. Okay, so you already have this. Look at it. You'll follow along. So now you could see it. Stop it, and what did he say in the class? What did he do? What did the author say? Read it, and it'll walk you through it on this one. Again, follow the numbers, follow the arrows. It'll make it sense. Remember, you already discussed it, so it'll all come back to you. Just the exhibits that came in here. Okay, so I have this. Where the heck? My gosh, I got a lot of stuff active on my line. Okay, so banker's acceptance, bill of credit. Okay, so bill of exchange or time of a draft drawn on and accepted by a bank. It is the accepting bank's obligation to pay the holder to draft maturity. Okay, hope the bank doesn't go under. Okay, so the next one we're going to do is working capital finance. Remember, we're in the pink or beige or color. The bank may provide short-term loans beyond the banker's acceptance period. I could do more. When you're a good customer, talk to me. Remember, the relationships of my financial institution and the MMC is important, not only for the parent, but also for in the subsidiaries. Because the bottom line is which one makes sense, what's going on, where my cash is, depending on all the other factors that we've done, you're at the end now. So working capital finance, but you're a good customer. I trust you. We got a good relationship. I may say, okay, we'll extend it for a little bit longer. Okay. Now the next one is medium, and a medium-term capital goods financing. And that's what the factoring when you look at it. Okay. Trade finance, I always have these little things in bold at the top, so just in case you have the black and white printout, printing out color, you at least have an idea. Well, good color doesn't do any good, so you know I'm looking at financial method, ties in all the way to the other side on there. Okay, so similar to factoring in that the factor or factor, that's all it is. Okay, assumes responsibility for collection. Remember, I sold it, my accounts receivable or factoring to somebody else, and now it's their baby. It means they have to collect because now I am the owner of that debt. I took that IOU, for lack of better words, from this party. I sold it at a discount because I need a cash flow or I need the money to invest in capital, or in this case, medium-term capital goods, and that could be building and material, whatever you want on there. And the capital goods is more of a longer term, more of a fixer asset, for lack of better words. But I bought that or sold that. So if I bought that, those accounts receivable, they're mine now. I am responsible for collecting. I paid him. They're there. It's like a good deal because I'm looking at, as for lack of better words, an annuity in reverse coming back to me. Okay, it's a payment from the buyer, the underlying credit risk, and the risk pertaining to the countries involved. Transferred over. So be careful when you're buying accounts receivable. What's going on in that industry? It sounds like a good deal. I'm buying somebody's IOU. Are they going bankrupt? Do I know everything else? What's going on? You don't know. Crystal ball. You don't know. But you understand what's going on with that client or the relationship, so you'll do good on that. You trust them, or you're involved. You know what's going on in the market. Remember, you're in finance. There's always a risk involved. But if I got such a good deal, I got to be careful, But what's the worst case? So I'm always looking, I might have to do some hedging. I might have to do something just to make sure. Remember, I do the hedging now, but I can always sell. I could do something else. I just want to make sure it's working well. Okay, because I could readjust my inputs or outputs depending on what's doing. And what we're looking at with computers and everything else, not only in quarterly, it's monthly. Your dashboard. A lot of companies are looking daily what's going on and making those adjustments. Don't do it and walk away for it and say it's going to happen. Whatever happens, so be it. That's not how it is. You always have to be monitoring to make sure what's going on in the market and how I can minimize the cost to the parent MMC shareholders well. That's what you're hired. That's what you're doing for. Okay. Now, so I've taken care of that. Now, Countertrade. If you look at Countertrade, denotes all types of foreign currencies transactions. Think of it before I open up the other one. In such as sales of goods to one country is linked to purchase exchange of goods from the same country. I'm trading something. No cash is going. There's a cash equivalent because I got to show that in the book. But I don't trust their income. I don't like. Look, if somebody writes me a bad check, and I say, hey, go, I'll pay you. I don't want to pay. I don't want your money's no good. Your check's always bounced. Either give me cash or give me some collateral or something that you have, a service or something that's equivalent to the dollars that I could take, utilize it within the host country where my subsidiary's at, or that I could actually sell that commodity. If you look at China going to some of these developing, emerging markets, for lack of better words, and there's political unrest, they don't want the money because that currency may be not as effective with inflation. They want the commodity. They want the good. They want the land. They want something on there that they could. Okay, we'll pull it out. We have this. We'll trade this. Your currency. I'm not worried about it. I could sell that or utilize that as part of my process instead of cash. That's all Countertrade is. Okay. Now, internet agencies that motivate international trade. Let me just close this off so you're focused on this. Okay, there's several in here, and I've got some links. The author has some links. I'm not going to talk about that right now. You might have been already exported to small business. There's a lot of things that help small businesses, and one of them is Export Import Bank of the U.S. It's established in 1934. A little history. Goal of facilitating Soviet American trade. Its mission is to finance and facilitate export of American goods and services and maintain the competitiveness of American companies. Remember, the government always has got to look out for its own first. There's that by it has, just like China has to look at its own market first. I know it's making a big ripple effect in the other markets to try to do that, but they have to. What's going to happen here? Why do people revolt? Revolt because if I don't take care of my constituents, people within that country, they're going to want more. They want the goods, and now Chinese have got the taste for the market. They got the taste for goods and everything else. You can't just cut them off. They're going to want a change. The same thing that's happening in the U.S. We're doing all right. Coming back. Economy's bad. They don't care who's in there. Give me a new start. So that's why the election's coming up. If the economy's good, no problems. Right now you got President Obama. Hey, his unemployment's down. Things are looking good. Now that China's throwing a wrench in there. What's happening in there? Could it affect? Could we fall back? Our economy, we're very stable, controlling the Federal Reserve, but because what's happening in China, it'll have a ripple effect even on our own. Could we fall back in recession? There's a possibility. So you have to look at that and how do I minimize my exposure or my risk as a multinational parent organization, and I got different subsidiaries. How do I move money around as I would to different accounts domestically? Now I'm just doing it globally. Let's look at the big world as one big domestic market, for lack of better words, what we call global economics. Okay. Now, private exporting fund corporations, okay, is owned by consortium of commercial banks and industrial companies working together. Provides medium and long term fixed rates, financing to foreign buyers. Foreign buyers in here because it helps the economy. If the parent company is coming in here, so I'm exporting funding to set up the operation or capital investments here in the host country, here where the subsidiaries are, because it helps the economic condition of my geographic area that my subsidiary is working in. And that's what they're it's private export funding. Just a little more. I'm just giving you a quick general, just a review. How you remember in your mind is what you need to do. Look at the terminology. Look at the concept. Don't try to study word for word. Unless some people have photographic memory. Most of us, we just need those tidbits there, and we could understand. If I understand the main parts, I could have any kind of problem solution. That's your critical thinking skills that you're learning at a college. As you, or even at college, most people, businesses, entrepreneurs, you're in the business, you'll pick up on that. If you don't have critical thinking skills and when I say creativity, thinking out of the box, you'll be out of business. So that's some mute issues. You develop that over time. I want you to focus in on that. Okay. Oh, I'm sorry, I missed this one. Okay, export goods and overseas market. I knew I forgot something. Offers guarantee programs, which is a export import bank. I knew I forgot one. Loan programs, bank insurance, and export credit insurance. Okay, now this one here provides medium financing. Okay, now overseas private corporation, not OPIC, not OPEC. Shift. Where am I? Yeah, so it looks good. Come on. Presentation's the first thing. What do I have here? Self-sustaining federal agency responsible for ensuring all U.S. investments in foreign countries against risk of currencies in convertibility, exportation, and other political risks. I probably pronounced that wrong. That's why you have it out here. Okay? So we're done with this. Those are the agencies. Ooh, geez, I'm going to be over. Here's our summary. I'm going to go real quickly. Common methods for payment is prepayment, letters of credit, draft, consignment, open account. These are the main topics. Most, I'm going fast now. I'll slow down. You could always stop me and just look at the picture, my concept map and add on to it. Most popular methods, I almost feel like I'm in a classroom. That's, I always speed up, talk fast, because I got to cram so much in here. Here you have me at the leisure. And look, here's so nice. I kind of like his style. Sign up for the class. Remember, I try to pay off my student loans. This is why I subsidize my student loans by teaching at 2 community colleges. I'm an outsourcer. I'm a contractor for the schools. They help me. I help them. Right? It's a different inflow of cash. Utilize money put away for some. So sign up for my class. Make sure you take me in my class. What's happening? Sign up for my class, or if you're not in the area, sign up in another community college and get the book, get the information, and you'll actually learn the material more in depth. Here you have a real quick general overview. Okay, most popular methods. Okay, our accounts receivable, factoring, letters of credit, banks acceptance, working capital, finance, international trade, medium and term goal financing, or forfaiting, and Countertrade. Let me just go add a dictionary. This is when I'm live in the classroom. It doesn't look bad. Oh, you spelled that wrong, Dr. George. No, I didn't. It's just that the dictionary here is not taking in those business terminologies unless I add it into. Major agencies that facilitate international trade with export insurance and loan programs are export-import banks. We just talked about them here. All right, you have all of them. Private Exporting Fund Corporation and Overseas Private Investment Corporation. So what we had here, we did pretty good. We covered everything within an hour and probably some few minutes. Right on it. Let's expand to the one level. Okay, and view. I want to make sure I leave you because some of you I get some comment. Dr. George is real good, but I like to see the ending. I like to see everything else. I'm a slow writer. You talk a little bit faster. Okay, so there we go. We covered all this. You have everything you want. This is Finance 225, International Finance Management, offered by Harper College. It's a community college. You're in an online or face-to-face class. Utilize this. It gives you a quick summarization of what we've discussed in class or online. Look me up. Ask for me in class, see what courses I'm taking. You don't see them. A lot of times I got other courses, may not be in there, because everything's technology. It doesn't pop up yet. A lot of colleges do not send out course catalogs anymore. You have to just log in. That's just a way, trying to save that environmental footprint, reduce it. So look me up, ask, call for the division. Hey, is Dr. George, what are classes? Does he have a waiting list? What's he teaching on there? And that's said, hey, he must be doing something good. And they'll say, well, we'll rehire him again for next semester. All right. So again, my name is Dr. George Mochocki. This is International Finance 225, offered by Harper College. We covered Chapter 19, Financing International Trade. It's a good baseline understanding. We have 2 more chapters after this one, and then we'll have the final exam. But then you'll have a good overview, and save my YouTubes or look at my YouTubes or my channel, or Harper College has Harper iTunes News that has not only my recorded lectures, something similar to this, but other instructors. So if I'm a little confusing the way I present it, maybe another instructor utilize a little terminology, and that a lot of times I will use different YouTube for different instructors just for that reason, because I will say it one way, but I want to make sure you understand it. There's no way I could teach you anything. I could just facilitate. You have to be the learner. You have to be the sponge. You have to say, what did he or she say, and what did the author say, and that's why I try to really follow the same rationale, the logic, the same terminology, because that's what you're being tested, to give you that good solid foundation. And then forward you'll be able to understand, and you'll say, okay, I understand this, now it makes sense, because in my mind I see it, and now when I do the equation and I see the numbers, it has more meaning to it than just a graph or numbers. Where do those graphs and numbers come? I'll see you in the next lecture. Have a nice day or evening, depending when you're looking at me.